It's UPBOptionMillionaires.com. It's the weekend, January 9, 2016. What a historic, nasty sell-off to start 2016. And I bring up this chart here. This goes back to 2008. Well, guess what? We had a pretty nasty sell-off to start 2008 as well. And look, we kind of consolidated here through the late of parts of January and into February. So let's look at where we are now for the S&P 500. You can see the move back. I talked about this before the start of the year as my outlook for 2016, that we come down and hit these August lows. Well, look at this. In the span of a week and a half, really, because the sell-off started before the end of the year, the end of 2015. You can see we're almost down at that level. It's pretty amazing on S&P 500 futures. That would be long-term trend line support. Again, I talked about it hitting that level and possibly breaking through it. And, you're starting to see more and more people talk about it as this market has pulled back. Had the market done the exact opposite and continued to consolidate here, it'd be a nice bull flag, and we'd probably head up to new all-time record highs. We've done the exact opposite. Crude oil fell to a new low here, 2016. You can see crude oil, I've been talking about this for many, many moons. Long-term trend line support has been broken. So many people, even at the start of last year, hey, this is it. Crude oil's going to bounce. Well, if you pull up a trend line, go all the way back before the year 2000, the internet bubble, just draw a trend line straight across. You can see we've broken through support. It looks pretty nasty. Now I'm this down into the 20s. Because where we're going to head in 2016, I talked about that as well. The U.S. dollar index tried to break out last week on the heels of, the risk-off trade used to be the fleeing into the U.S. dollar. Not so much, but still consolidating here. And I think we're going to head up into the 14-plus year highs for the U.S. dollar index in the triple digits. On the heels of the Federal Reserve doing everything, the exact opposite of what the other central banks are doing, which is not devaluing their currency anymore. So they're the dirtiest pig pen in the slaughterhouse. Pretty nasty analogy. If you look at the bond market starting to rally, if you look at the TLT, I talked about it compressing into 2016. It certainly has. I think the bond market is going to sell off, but right now the charts are pointing towards more upside, at least in the short term. If you look 30-year, 10-year Treasury seeing a strong bid, and if you pull back from a long-term perspective, I brought this chart up on my outlook. You draw a trend line across here. This is the support for 10-year, and if it breaks down, that's going to imply higher interest rates. Again, it's the rock and the hard place. I think higher interest rates are something to watch for, and that's going to be a headwind going forward for corporations trying to refinance their debt. It's going to put gum in the gears of the share buyback machine that's going on with a stock like Home Depot, which has been pulling back to start the year. So you look S&P 500 here, the ETF, the spiders, trying to get back down to levels of oversoldness that we saw back in August. We're not there yet, but we're going to get a buy signal pretty soon, at least from a short-term time frame. Maybe we'll get one of these bounces here, because I don't think the sell-off is going to come as fast and furious to the downside as some of the sell-offs we saw back, say, for instance, 2008. And if you look from a long-term chart perspective, and I keep bringing this up as well, we're up here. The 2008 crash started here, and the internet bubble started here. So there's a lot more room to trade for the downside if we do indeed, and you draw a trend line across here, come down to the 145, 150 level on the S&P 500 ETF, the spiders. The trend will be broken, and then we can be more biased for puts. So there's still some room here for a bounce, and possible to avert this move back down to long-term trend line support here for the S&P 500. We did break through it. I talked about it when we did in 2013 as a very bullish action for the market. Seemed to run out of steam here. And if you look, the trading action, and even from a chart perspective, looks eerily similar back to just before 2008 when we started to fall. And again, we started off 2008 in pretty nasty fashion as we were doing with 2016. And also, if you look 2000, 2008, 2016, all 8 years apart. Something else I talked about in 2013 when we broke out, because we had so many people here along the ways from the lows of March 2009 calling for a market crash. And each time we pulled back, the market got back on its feet, dusted itself off, and continued up, ultimately to record highs last year. A lot of the stocks that ended the year with new all-time record highs. Google went up to almost $800 pulling back, but look at that candle. In the whole context of the move from 2009, we're getting this nasty pullback, and that's all you're going to give me. But again, on the flip side, if we do indeed continue to fall, some of these names that have been up pretty handily over the years, stock like Home Depot, which has been buying back its stock hand over fist, well, when it becomes the only buyer of its stock and we start to see investors sell, this little candle turns into something where we get back to this 80 level, and that's going to be a very nice move. Look at us. We're just starting to dip, get the sell signal here as we start to break out of the overbought conditions. We could come down here all the way down to this level here, which would imply, gosh, a move down to 80 at least for Home Depot. We've already seen it with some of the other big names, with Boeing's pulling back from its highs. Disney was over 120 after it reported its earnings report, dipped under 100. And everybody thought this is a great buy the dip opportunity. We did have a nice rip to the upside, but starting to pull back again. Even Star Wars is not helping to put a bit under the stock. The analysts are becoming very negative on it. Some other stocks that look very nasty. I talked about Caterpillar at the end of 2014 when it was over $100. I said, we're not going to see $100 for a long time. And boy, was I ever right. It's dropped down. You can see it's hitting lows that we haven't seen since 2011. Drew a trend line across. We're on the cusp of breaking that. We break down. We're in the 50s. And that's something else I thought I would see in 2016, a breakdown for Caterpillar, which is also going to flip over to John Deere. Deere & Company at support here. Look at this. This is a beautiful bear flag shaping up for John Deere. And you see it's breaking down some of the commodity stocks that haven't really broken down yet. How about Monsanto? And I joked around a little bit last week when I drew up this bearish chart. You can see the bear flag starting to break. That, you cannot genetically modify this chart to make it bullish because it looks very bearish here. And you get these similar patterns. Maybe it'll play it out a little longer, but ultimately going to head back down here. Probably to about the 70-65 level before we get another bounce, and maybe that'll be another flag and we continue to break down. Another chart I've been talking about for many, many years, not just a couple months, FCX, for a breakdown, head and shoulders pattern. Did not break initially back in 2013, but when it did, folks, what a nasty sell-off to record lows. Actually, since we haven't seen in 2003. Of course, it did a forward split on its move up after the financial crisis. Cut its dividend, suspended it here, and we saw a nice rally. Well, guess what? They cut their dividend, suspended it here, and we're just continuing to the downside. I talked about FCX being the next CLF. If you want to know what that means, and I was talking about that when it's up in the 20s up here. Look at CLF, folks. CLF, nice move. Where is it now? Gosh, $1.61 on the verge of just going belly up. So watch some of those. On the flip side, you want to look at some of the gold miners. Maybe getting a little bit of a beat of life here. We'll see. GDX, something to watch here on a 2-year chart. Looks somewhat bullish, and this is something maybe if people were going to buy something amid this market carnage, would be the gold miners. Also GLD, gold, getting a bit of a bounce this week to start the year. Is it just a dead cat bounce? You can see the velocity of the move, possibly going to pull back to start next week. And also look at USO. Wow, this is over $20 last year. Now under 10. Just an amazing move for crude oil. Continues to get beat down. And also Apple. Talked about this 105 level as being key support. It was the neckline here of this head and shoulders pattern. You see a break through that. Came up to kiss it again. It was the irony of it was Wednesday, I believe it was, came up, kissed the 105 level. Then the next day reversed that and reversed it some more, and just carnage for Apple. Seemingly ready to break under 90. Carl Icahn's $240 price target now $150 away. But Apple looks pretty bearish here to start 2016. Of course, it'll have some rips and rallies along the way. And maybe the support level here at about 92.50. Look at that, the move that we had back to Ebola in 2014 will offer some support. And we got to go with the, continuing with the FANG here. We have Amazon. You see the gap. It had its earnings report gapped up to record highs, and you can see it's starting to come back to that level. To me, with this pullback, you almost think it's going to fill this gap before it continues to head to the upside. Starting to get pretty beaten down, though, pretty much like every other stock out there. If you draw a trend line across, support was right where we are right now. If you draw a trend line up, and that you can look at the chart I put up at StockTwits and Twitter. You can see this gap here. Very good chance that gets filled. Netflix was beaten down to the middle of last week before it came out and announced they're expanding. They're now streaming to Mars and Pluto and Saturn. But you can see that massive spike up almost 8%, starting to give it back. And if you look, it just looks really bearish to me down to about the 100 level. Look, you draw a trend line across here going back to last summer. About the $100 level is where we're going to find support, and that's a big round figure. Facebook broke under 100, was briefly over it yesterday, but you can see also looks bearish, some pretty nasty action here. The volume's starting to pick up. A little bit more downside left here before we probably get a bounce. Also look at Twitter. Talk about downside. My goodness, and I've been trading this for a little bit of upside the last couple weeks, very unsuccessfully. But I think at one point we're going to see a bottom here. We're going to get back to $30 on Twitter. Probably later in the year than earlier. Now, I am Captain Obvious. Thank you. And if we get that move up to 30, it'll be pretty lucrative when it happens. It'll be timing is everything, but you can see we're shaking everybody out, including some of the insiders. Directors selling down at the 2021 level just came out with a filing late this week. So Twitter doing what everybody thought it would do, just continue to fall, except me. And I think longer term, I think Twitter's going to go. But look at this pattern here for VXX, finally catching a bid. If you draw a trend line across, a little bit more upside to go. It was up big, especially late in the day on Friday. So let's see some sort of a blow off on Monday. Everybody's calling for a market crash. We might see more downside, but I think it's going to be a buy the dip. I got to look right at the morning, see what prices we open up, but we might get a buy signal here on the SP 500, at least in short term. So that's where I'll be looking at start of the week next week. I think we're going to see some sort of a relief rally longer term. Again, I think we're going to head down to the August lows, and there's a good chance we're going to break them. EuroPBOptionMillionaires.com. Short term, I am looking for a bounce after a little bit of weakness on Monday. Longer term, I think this market is going to really take a turn for the worse down the road, but can't rule out a snapback rally along the way, especially with the central banks. They're not going to give it up easy, and that's what we've learned since the lows of March 2009. Be prepared for a do anything it takes kind of comment from the central banks to ramp S&P 500 futures. Everyone have a great weekend. UPBOptionMillionaires.com. I'll see you in the chat room on Monday. Goodbye.